Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Actually, I was surprised. Somebody said yesterday, Brian, you got to do the intros a little quieter. You blow my ears away with your craziness. So, welcome to the Daily Brief, everybody. I don't know whether you can hear that or not. Nick is in the Zoom call with us this morning. Nick, you're such a stalwart. Zoom is not as friendly as the Hangouts for interacting with you, but it is good trade-off for the better quality. All right. Well, thanks, Nick. Appreciate the input. We're always sort of, tinkering and experimenting here at TRI, you know, and 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 how do you do the crybaby? I don't know. So they got me a green screen, so I'm looking all professional now. Yeah, kind of looking like a bum this morning, but what the hell? That's the one good thing about living a trader's life. If you're a trader and not a social media guy, is you can just roll out of bed and throw on a baseball cap and a jersey, and away you go. Somebody says it's midnight here in Hong Kong. Hey, wow. Super Googlelessly. All right. Was that you who asked about the Hong Kong stock market yesterday? And actually, I think you did that. I don't know whether that was you or another person. Actually, surprised we even have a few people out of China, considering the way that I badmouth Winnie the Pooh and all that. But anyway, great to see that there's some interest from that part of the world in what I have to contribute. But somebody had asked me to look at the Hong Kong stock market. I think it was Hong Kong or it was HSI, and I think that was the Hang Seng. So actually, I did a fairly lengthy review of that last night, or yesterday's Daily Brief after party. That was, if I'm not mistaken, yeah. So I don't know whether that was that was you. All right. So anyway, watch the after party video. We did quite an extensive review of the Hang Seng market yesterday. It was an interesting study. I was a bit surprised at the conclusions, but anyway. Okay, so here we go. About a half an hour. Try and summarize what the hell's going on in the world. And maybe put price action into context. I'll try my best. Obviously, no scripts here. We're just living a trader's life. Just reporting my impressions of what I see, and of course, remember this is all my opinion. So certainly no guarantees from the management, but we try our best here. That's all we can do. I think we started off Monday, and if I'm not mistaken, Chris suggested we should circle around and continue our adventures in Commitments of Traders report, land the COT report. Considering today is Wednesday and they're put out on Tuesdays, it's not a bad day to look at that. But, start off our conversation with the US dollar index on Monday, kind of thinking what would we be expecting sort of over the coming sessions. Still like the idea, actually somebody was even asking in the lounge, what the hell is BFF? I keep seeing this BFF notation. I don't know what the heck you're talking about. And BFF is sort of something that I just clued into here recently, best friends forever, all that kind of nonsense and social media. But I like BFF, and I always like for students, one thing I like to do is to try and associate colorful names, imagery, action, outlandish, almost things that make you laugh and smile and stuff. It's a great way to try and remember this stuff. And by the way, these things are called tails at the bottom of candlesticks, not wicks. Think of a tiger's tail or a dog's tail or a cat's tail at the bottom of these things. That went on yesterday at length, and people were laughing at me on the site. Old man's yelling at the sky. Anyway, so BFF, kind of a funny acronym. People remember as best friends forever and stuff. But I like it as Brian's favorite fib, 78.6. And I tell you, man, this is a killer level. In fact, actually, in the Bitcoin chart just overnight, it's incredible. Like, here was Brian's favorite fib from last night, yesterday's trading range. And look how the market M'd out on top of it, then came and actually W'd out underneath it, then went screaming up, then came right back and topped out, and now we're back below it. I mean, this fib, these levels are just awesome. So anyway, somebody was asking in the lounge, what the heck does BFF stand for? It stands for Brian's favorite fib. So there you go. Anyway, I get the impression from the US dollar index that we're in a bit of a holding pattern. Usually when this thing is surging up through the top, it means that, people are a little stressed out. They're running into T-bills. They don't want to have their money invested in stocks. They don't want to have invested around the world in various different global currencies. They just want to park their money in T-bills. And then you can make the argument if we break down through these lows here, it means, woohoo, the party's on, rock and roll. We're all going to get rich buying risk assets. People are taking their money out of the US dollar index and putting it to work around the world. So I think we're in a bit of a holding pattern right now. And of course, we're coming up against the bottom end of ranges. So should we see some back and forth in here? I kind of think so. I'm not quite sure what it's going to take to punch through these lows. But I think while we're sort of swimming around here, I don't think we can make any grand conclusions about anything really in the market until we either get a big fat W that comes in here and we see some momentum push to the upside, or we get some sort of puke out through these lows and huge bear ABCDs. And I think the whole world is kind of just waiting. We did have the euro moving up smartly of late. It looks like it's rolled over. And I think, 35% of the US dollar index is that euro. So I'm starting to get a lot of sort of risk off kind of sentiment here just in the short term. So you can see there's that rolling top in the euro. There's a bit of a bottom in the US dollar. Interesting how the Japanese yen is just slowly climbing higher here. We might go back into every once in a while you see this funny sort of market state where you have gold, you have the yen, and you have the bonds all moving up in unison. Remember for about 5-10 years, and Apple Computer, about 5-10 years we had that trend that just went on forever and ever and ever. Well, let's see if it re-exerts itself. I did notice bonds, again, catching huge bid. Econs out today. I don't know, didn't see anything that's like jump off the cliff worrisome. But again, it's more like economic malaise, anything else. Sort of significant, here we are Wednesday. The headlines, what I like to do when I first get up in the morning is I go through a fairly lengthy sort of checklist process of all my different trading plans and have I set myself up for failure or success. So I start off just by asking myself, how am I doing? How's the computer doing? Obviously, we can't do anything without the computer happy. What's my diet like? What's my sleep like? I just want to make sure that I'm on a good footing. I did wake up, some days you just wake up and you've got, meetings and stuff, or, maybe it's a Monday and you really don't want to take trades. So a lot of days I'll just check out. Today I was ready to rock and roll. Loaded up the headlines and, we're sort of presented with U.S. private companies add less jobs than expected. And of course we had that JOLTS report yesterday, which really, I think, kind of rocked the market. In fact, actually, I was even putting tweets out about it. It does look to me like the people that are sort of driving the bus here, whoever the hell they are, they wanted to slow things down, and here was the JOLTS image. They are getting their wish. So I think the Econs today was just a reiteration that, the jobs market is slowing. I think you could probably also take note, and I've seen this repeatedly over my career, that you just basically follow what Asia kind of did. And especially, I've told you, I think I said yesterday, but I don't know whether I did it in the public broadcast or the private video, that usually Asia sort of sets the tone for the day. Japan used to be the world's second largest economy, and I wouldn't be surprised after Winnie the Pooh and all that nonsense plays itself out that Japan goes back to being the world's second largest economy. But nonetheless, China, of course, is in all that mix right now. And, the question you have to ask yourself is how much Japanese money is actually invested in the whole China build out. There was always a debate about that. Interesting how this Sensex, though, was up a good 1%. Shanghai was up about a 0.5%. So a little bit of a mixed bag. Australia sort of mute. And you can see Europe, they're not really overly bullish. I mean, there's Britain up a little bit, but the rest of the sort of the mainland down. They found it interesting in yesterday's Afterparty report with TRI CTO Sjord on the call. He was reporting that Italy now is trying to figure out ways to ban ChatGPT from their country. And they're using a really weird sort of, wow, this is a violation of private policy. And are you having the bots seducing children online and all that kind of crazy talk? But anyway, so interesting kind of odd sentiment out of Europe right now with regard to things like AI. But mixed bag. Like I said, Britain up, Spain up, but the rest of Europe kind of soft. And as I said, Japan, that's a fairly sizable punch in the nose, 1.68. Of course, we always say, not a bad idea if you're watching this to learn, write it down. Usually if you don't see movement underneath 2%, 2.5%, doesn't really grab the market's attention. So on balance, I see sort of a meh kind of day. Dow's up a whopping 32 points, 0.09%. Tech stocks kind of taking it on the nose here, following, I guess, Japan a little bit. And of course, if tech stocks are under pressure, then that probably means things like crypto and Bitcoin and stuff are under pressure. So, but I get the impression that it's just kind of like a meh day. And I went through all my my normal routine. And I got to sort of, and actually I'm super excited because I think Chris and I are going to try and do the opening range trade in like crude oil in the future. So, I have it on the sheet as to part of my daily routine, but I haven't been doing it lately. But Chris and I really enjoyed working with Chris there for 2 or 3 months there back the end of the year, beginning of new year on that opening range trade. A couple of trading plans. I'm just kicking around, just watching. Then, of course, I go through all my 4-hour levels. And I didn't have anybody set up a trade for me this morning. So, on top of the fact that the volatility was relatively low, we're just in a really kind of weird, funky part of the market state. For example, like crude oil, I was thinking trend continuation. OPEC, they're gonna, the cartel's gonna start flexing its muscles and all that. And the market jumped up, but you can see basically over the past 3 or 4 days, we just had oil inventory numbers come out, and there was a fairly sizable drawdown in oil inventory numbers. How much of that was actually anticipated? Keep in mind, a lot of the time the EIA, it's priced in ahead of the actual data release. API, I don't know whether you're aware, but American Petroleum Institute, this is a private organization. They usually come out with numbers on Tuesday afternoon. So if you're an oil trader, you usually get a little bit of a heads up. You can see that it comes out at about 1:30 my time after the market closes on Tuesday to give you sort of a warning of what EIA is going to spit out. And you can see EIA oil stocks down 3.7 million barrels. Probably the thing that jumped out at me most, though, was gasoline stocks actually were drawn down quite a bit here, more than double expectations. This kind of makes sense because I think to a certain degree, you're going to have a lot of sort of the American public maybe not buying that big high-priced airplane ticket to like Hawaii for summer vacations or Europe or whatever. And you're probably just going to have a lot of families, especially with all the inflationary pressures, kind of do the National Lampoon's Vacation. I don't know whether you remember that, where what was his name? Chevy Chase? I want to say Chevy Chase. I don't know whether that's his name or not, though. Anyway, took his whole family to Wally World, right? They drove from Chicago uh, to Los Angeles. And that was a famous movie from the early 1980s. And I actually think there's going to be a lot of very similar type of economics to the early 1980s. Yeah, that's right. Actually, Hawaii, speaking of Hawaii, I'm sure Zach's not going to be too happy about it, but they're kicking around the idea of adding like a tourist tax because they're saying that the tourists are destroying their island islands. Anyway, we'll see how that goes. So the thing that caught my attention today, if there was anything, was the drawdown in gasoline stocks. Anyway, I would say, in this case, this is fundamentals, and these are warehouse supplies. And if you have less supply, then that must mean higher prices. Just do a supply and demand curve, and you'll know what I mean. So inventories are being drawn down, and this is basically what's supposed to happen because the unleaded trade goes. You buy your unleaded in the middle of February, so when inventories are very high. In the end of the winter. Not a lot of people are driving. Inventories are drawn down as the wholesalers sell the gasoline to individual retail outlets to get ready for the summer driving season. So ironically enough, this is actually going exactly according to plan, and the trade should be you buy your unleaded the middle of February, you sell it the middle of May, you made money 9 out of the past 10 years. The interesting thing about that trade, though, is that kind of got derailed there a little bit. And obviously, what's going on in Eastern Europe and stuff not helping the case. But there is our unleaded chart. Here is the middle of February. So, well, the commodity brokers are still pretty happy. And my hunch is with that number out today, we're probably going to see a bit more of a bid come in on the unleaded market. Which should, you never know, there's no guarantees in this game, but it should help crude sort of stabilize, which should maybe give a bit of a pause to the gold market. The interesting thing about the gold market here, though, again, like I said, I go through all my checklists and stuff first thing in the morning, my routine to sort of set up trades. And I don't have anything here to work with. Yes, I've got some horizontal support and resistance. You can see I've got a couple foggy boggies sitting just on top of us here. And anytime I take trades here, and there's a fog and bomb just sitting just on top of us, I end up getting stopped out because the market needs to go to this fog and bomb level. And now you can see all this action today is just one big honking Darth Maul. So again, ideally what I like to have is like fog and bombs, moving averages. Notice how this 30 SMA is lining up with his ATR level. If we had a nice little dip, and then you probably could do a horizontal support and resistance against this low right here. Okay, so price action down there might get me on the buy side. But right here, I got nothing. So I got nothing there in the gold to do. The oil kind of floundering up here right up against these old highs, but there's ATR, here are moving averages, and here's settlement. I mean, I don't really want to take a trade at settlement unless it's like some powerful trend continuation trade. So then that brings us to the stock market, and the stock market, this looks to me like a bear ABCD, but this is sloppier than slop. Got a couple foggies. Brian's favorite fib again. Beautiful illustration of this 78.6 concept. So I suppose first thing this morning, when was that? That was midnight. London kill zone. What a surprise. What do we say? Who can over on YouTube can answer this question? What's the statistical probability that either a Tuesday or a Wednesday through the London kill zone you will have some sort of reversal in the market. Everybody should be able to answer that. So, what a surprise. There was a half decent level. These foggy boggies here were telling us mark was overbought. 78.6, right? We can mark that up as Brian's favorite fib. And through, thank you, Josh. You're the only one who is placating me today. No, not 66, DMAC. 70 to 80%. There was a pivot up here through the London session, but when I wake up, of course, here I am. And actually, I guess that's down here. So that was Tuesday yesterday. So this morning I'm down here and I'm just stuck in a moving average sandwich. And there's not really much I can do right here, right now. And terrible level for me to consider taking a trade. We're not supposed to take trades at trend lines. You wait for the market structure. If we got a W on top of this trend line, awesome, we get a buy. And now I guess we're going to have to wait for some sort of M. But, oh boy, it just looks like the whole market's coming to some sort of apex. So put it all together, I'm kind of handcuffed right now. It's just not really much for me to do today. Suppose when we circle around and we look at Bitcoin, what a surprise. And I've been joking about this, but what does 3 consecutive weeks of doji look like? I mean, this is brutal. So there is more sort of, and actually the tweet that I put out on Sunday was, sometimes the market just, you just gotta just do nothing. You just gotta cool your jets. And I think that's exactly what this Bitcoin is doing. It is breaking hearts right, left, and center. There was, there were bearish bots, and of course there was, crypto influencer guy, Cobain guy, who is I don't know whether there's any actual definitive proof that this is the case, but I got the impression that he kind of accidentally, but maybe intentionally, tweeted something out to freak everybody out about CZ, and then later on, people were like, hey, if you're going to fall for photoshopped crap by social media influencers about CZ, maybe you ought to reconsider your life's choices. I don't know, stuff like that. But, oh my goodness, this is just back and forth, just... I would imagine there are a lot of new crypto people that are just getting absolutely destroyed here, going, okay, this is the bottom, we're going to the mid, up. Okay, this is the top, we're going to zero. And probably as soon as everybody gets all bearish, the damn thing's going to pivot and head back up. What does that look like on a weekly chart? It looks like 3 dojis in a row. This is brutally painful. It's almost like the whole world is waiting for some sort of catalyst here. What I'm a little bit concerned about here is, of course, over the past couple weeks, it was okay for the market to sort of, be grinding its way higher here, as long as the breadth indicator looked relatively uppy. But you can see now their fast indicator actually went all the way into the 90s and is actually rolling over. And now the slow indicator is up into the 60s. We might actually get a bearish signal out of the stock market here relatively soon. We don't have it's interesting to see that in the short-term basis, the whole world's equity market is pointing up right now, which is dangerous. We haven't quite gotten ridiculously overbought on the medium term, which maybe leads me to believe that we probably need some sort of short-term pivot. You can even see the S&P 500, like basically a basket of U.S. stocks, it's starting to approach overbought condition here in the short term. So maybe what this sort of tells me is that, it's not really like, oh my God, the sky's falling. Medium term, nothing's really egregiously overbought, but you can see the balloon is inflating. And my hunch is probably there's some sort of, just hunch, pure opinion. Usually the cliche goes sell in May and walk away. And we are in the beginning of April. If we found some sort of top came into the market all through here, from what I understand, this is going to be a pretty challenging tax year for a lot of people. I know in Canada, for example, a lot of people that got like the free money through all those stimmy checks and all that, they're actually being forced to pay taxes on those free monies. And a lot of people are like, uh-oh, I mean, I owe the government money now? So this is going to be a bit of a challenging tax season this year. I would be willing to bet. So, just be forewarned. Um, so there's your backdrop. I mean, on top of the fact that the Fed is getting what it wants out of this interest rate increasing campaign that it's been on. I mean, this is historic. The rate of change of short-term interest rates. In fact, they even said that even the Volcker years, it didn't have nearly the percentage increase, going basically from 0 all the way up to 5%. I mean, you just think of that on a percentage basis; those numbers are insane. So this should have a very resounding impact on the economy. The only issue here is that it is in the face of an extremely strong economy. I don't think that the United States itself actually suffers the most, but I've talked to you at length about this. I do think countries like Canada could get hit very, very hard here. And the sad part about it for a country like Canada is that, the 1% have gone and bid up the prices of local assets here so much that it's almost like we're doomed. We don't really have any choice. And they always say stock market crashes. They don't happen just out of the blue. Usually a crash, quote unquote, happens after a massive hyperinflation of asset prices. So housing prices, for example, in Canada have hyperinflated. So are they setting us up for a crash? I think so. Was interesting. We had, of course, our secret options formula club meeting last night, which is really kind of like a stock pickers club at TRI. We had a couple tech names that were kind of interesting. I did ask, let me see if I can just find them here. There we are, secret options formula. Actually, this is an interesting study. Effie, who was on Julian's Thursday show recently, was talking a little bit about the relationship between lumber and gold. And whenever you see a bullish relationship, i.e. this blue line here W's out, which means the gold price is moving up relative to the lumber price, it usually spells trouble for the stock market. So we were kicking that around last night. There is a big W that's come in here on this relationship. So the stock market, it actually is set up to take a bit of a thumping here. Let's see. We had names that we were kicking around. I think this was a tech stock. Although, geez, the one thing I don't like about Discord is you can't even really see these images very well. So it's awfully tough for me to show you that. Also, too, we were kicking around. Interesting how Bitcoin actually has 2 megaphones working right now. So, maybe we'll circle around and finish off with a little quick boo at Bitcoin. But interestingly enough, this has been the megaphone that I've been following quite a bit recently. And I think that we have to fail here. But if we do actually accept higher here, it does make sense that Bitcoin can work its way up into these megaphone level way up here, which is in that 35,000 area. So I thought that was an interesting addition that Chris mentioned. Did you want to say something, Chris?
You can actually open images from the open in browser in the bottom left hand corner of images there. So a lot of people on
Bottom
YouTube
left hand. Oh, this right here, that button.
yeah,
See
that
if
right there.
then
Yeah.
that comes up. Oh, there you go. There you are. So,
Also, we're coming up on 30 minutes, FYI.
all right. Geez, I didn't even feel like I even started talking, and now I'm already finished. All right. Well, I hope you guys got some value out of all that. But then I just killed. Oh no, there it is. It's just obviously there's growing pains with using any of these new platforms. So anyway, Zach just being a boss with his scripting program finding spread trades. I love how Zach has done this. think actually this is another gentleman who was in our club. Anyway, this was an idea. Okay, so let's see, because I couldn't read this earlier, so let's see what happens when I do this. All right, that's a little better. This is, oh yeah, we spent a lot of time on this one last night. Max Linear. I don't know whether I really like this trade or not, but anyway, there it is. You can see the base that's trying to come in here. Yeah, it kind of makes sense, I suppose. This is kind of along the lines of the semiconductors, if I'm not mistaken. I think this was another semiconductor name, but I could be mistaken on that. Don't quote me there. Anyway, we did look at quite a bit of the semiconductors. We also looked at a couple of silver stocks, and I suppose this is what I wanted to mention to you guys today. This little bad boy, SWLF. And we haven't actually looked at junior metal stocks in quite a while. The whole junior market just took an absolute punch in the nose following the Chinese Olympics, kind of trap that they laid again. Man, these Chinese are getting really good at doing this around their damn Olympics. Anyway, if you look at the Canadian venture market, it absolutely fell apart there following the Chinese Olympics last winter. Anyway, this is a pretty typical name, so here's something to put in your pipe and smoke it. SWLF, maybe do some due diligence, but you can see bottom end of the range, top end of the range. We've worked our way right back down to the bottom end of the range. It's a 10-cent stock. I don't know whether, I think actually there's even an OTC equivalent too. And I kind of like these kind of names. Number one, they're active. They're actually doing something. That's always a good sign. But also, two, I like the share structure. I don't really want to lose this. How am I going to do this? There we go. Oh, can't do that. Oh, well, guess we'll have to go here. Anyway, 10.5, 11 cents. But point here, 35 million shares out. I like those kind of numbers. They're active. They have properties in Mexico that they did some pretty big grab samples. I think I had told you guys. In fact, actually, we did a short of a stock that I had mentioned. Geez, I don't know. I guess maybe about 4 or 5 months ago. How was it? It was Dundee. This one, Dundee Precious Metals, and I had commented, and the boys put together a short. This company came out with news that they had. I think it was an assay of something like 60 grams of gold per ton over like 1,100 meters. Just some absolutely insane number. And I remember talking to you guys about it. Keep in mind, this is a weekly chart back here. So they announced that find right in here. And if anything, this should be a good follow-up. I don't know how we could do this, Chris or Josh, but look at what's happened. Clearly, the street has absolutely fallen in love with this stock, and it's just grinding its way higher. And now, and I thought this was an interesting sort of, we circled around to look at this bad boy. And if anything, technically now, what you should all see is one of these patterns. And I don't know whether you guys on social media know what this pattern is, but it's actually a very popular pattern in technical analysis land called a cup and handle. And the street absolutely loves this story. I don't know whether you can buy that there. I mean, ironically enough, at 60 grams per ton over 1,100 meters, this stock's probably going a hell of a lot higher. But it's just interesting to see how that has played out. Indeed, that was a very, very good idea to go and buy some of that stock on that news. So, why am I saying all that? Well, this guy, he came out with, this was last summer. Now, this is just grab samples. So, this is just like they walked the property and they just picked up a rock here, a rock there. 1,500 grams per ton silver. That is an absolutely huge number. And, this was, what you ask, well, Brian, why on earth did this stock, what the hell is the damn symbol again? Where is it? SWLF. SWLF. Why did this stock go like absolutely nuts there last year, right? And it was because of those crab samples. Well, here's a tidbit for you. If you don't know mining stocks and you don't know how to play mining stocks, the market loves to rally into drill results. So they walked the property. They announced that, yes, it turns out there is some very compelling numbers here. So they got a very good share structure. I haven't looked into shares for debt or options to directors yet on this thing. I just sort of, we found this last night. I'll do more due diligence. And by all means, don't just go and buy something that I ever mentioned. Do your own due diligence. What are your reasons to justify risking your hard-earned money? Blah, 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 blah. No guarantees from TRI management. You know how this game goes. But in the drilling and exploration game, it's the drilling results that actually cause these stocks to go absolutely insane. And for example, a year or two ago, we played this other fun little resource stock in Vancouver. Bought it down here. You can see I'm still long. But what caused this rally from like 10, 20 cents all the way up to $1.50, which is almost 10x, and it was on drilling results. So the point of the matter here is, look at this chart. Is that not in the reload zones? Is that not setting up Brian's favorite fibs? I talked to you at length there a few minutes ago about that. Let's see, where is the reload zone? Hey, look at that. It's now sitting in the venture cap reload zone. And of course, as I said there a moment ago, they are planning on drilling, and that's with a catalyst that will probably cause this thing to pop. So there's an interesting sort of idea for you to chew on in the gold and silver space if you happen to. And actually, they even do have an OTC listed stock as well. So David down in the States, he was looking at the OTC name. Me in Canada, I'd be interested in looking at something like this. And you can see, look at the huge hole on the charts up here at 40 some odd cents. So that's like, it's got like 4x written all over it. So anyway, why don't we leave the free video at that? We'll pop on over, maybe take a look at this thing a little bit more detail in the after party show. Also, Wednesday's kind of, I don't know how to describe it. I like to pick a topic and explore it with the community. And of late, it's been a good opportunity to take a look at the commitments of traders reports and what they're sort of telling us. So, all right. Have yourselves a great day, everybody. PMA for the win. Hopefully gave you an idea of why I think the market's kind of malaisy here. You can see US dollar index is catching a bid. Bitcoin doing what Bitcoin does. Still stuck in a trading range, and I still think, this is the third doji in a row. I don't think there's a huge hurry for anything right now, crypto-wise. But also, too, here's kind of an interesting idea. If you have never considered the venture part of the market or participating in things like mining stocks, this is one that you it might be a fun project to go and get to know the company, get to know the property, get to know who they are, what they do, and maybe throw like $50 at this idea, $100, money that you can afford to lose. If it doubles, sell half of it, you get yourself some free stock. If they hit those 1,500 grams per ton numbers at depth, the stock probably zips up to $5, $10 a share. And you'll thank me later. All right. Have yourselves a great day. PMA for the win. All the best. Yelling out for Rising. Bye.